the new CPI data is out, and the Bank of Canada has absolutely crushed the economy and the consumer, and it is very indicative of recession and depression when we get into the data here. So let's start off with Statistics Canada, what they said here. So the consumer price index rose 2% on a year-over-year basis in August, increasing at the slowest pace since February 2021. So if we go to the inflation rate here, you can see it's come all the way down on the CPI now to 2%. You have to go all the way back to March, February of 2021. And just think, guys, just think of the restrictions that were in place back then where you are. And just think about that's where inflation was, and that's where inflation they're saying is right now. Now, obviously, it's gone up substantially in between, and it's still rising. It's just rising at a slower pace. And these numbers are pure fiction, but they give us an idea of the trend. And essentially, as you guys know, what the Bank of Canada has had to do is they've had to take interest rates up to a high level, considering the debt accumulation that happened during the 10-15 years right here where my mouse is. So during this time, that was when most of the debt accumulation took place. And then you've seen interest rates go up to like 15-20 year highs. So obviously with that amount of debt, it's going to impact the consumer at some point. And we've talked about the lag effects before, and this is exactly what's happening. So mortgage interest cost and rent remain the largest contributors to the increase in the CPI in August. So we're going to get into rents last and go through some of the crazy increases and declines, because it's definitely a mixed bag when it comes to rents. On a monthly basis, the CPI fell 0.2% in August after a 0.4% increase in July. The monthly decline was led lower by prices for air transportation, gasoline, clothing and footwear, and travel tours. On a seasonally adjusted monthly basis, the CPI rose 0.1% in August. You've just got to think most of this is discretionary spending, apart from obviously gasoline. And when you think about gasoline, well, that's just indicative of the global economy and oil prices. So obviously, if oil prices are going down, that doesn't say good things about the global economy. I mean, you've had all these OPEC output cuts, and it hasn't done anything but just send the oil market lower. So obviously, with the oil market heading lower, what does that say about demand in the global economy? It says that it's going down, which is not a good thing, and obviously will also affect places like Alberta that rely more on oil and gas than other provinces. So Canada inflation month over month, this is what's happened, 0.2% here. This year has been particularly strong though for the CPI, and we've seen print after print of 0.6, 0.5, 0.6, 0.4% last month. So far in declines in 2024, we've seen 0.3% decline. If you add June and August together, we were flat on January. So, the inflation rate actually for 2024 is still up. And then obviously core inflation off 0.1%. Really not that much when you take into consideration some of these increases that we saw, for example, in May of 0.6%. So these are big increases, guys, not to be ignored. And then if you get into the breakdown of what went up in price and what went down in price, you had food, obviously, which was practically unchanged year over year. Shelter was practically unchanged again year over year. Households, furnishings, and equipment, which was down even more year over year. You've got clothing and footwear, which is off substantially. And I would highlight that, if you're not struggling right now is a good time to go out and buy clothes, especially summer clothes heading into the winter, because if you buy summer clothes heading into the winter and then you buy winter clothes heading into the summer, then you'll get the best deals. But, I was in Hudson Bay a couple of weeks ago, and I'd just been shopping at a thrift store. I was looking just for a fleece, essentially. And I was in there, and I found a Columbia fleece for $20. And I was like, what the heck? This is brand new. This is the cheapest I've ever seen clothes. And I was looking around there, and some of the designer brands as well, they were on sale for ridiculous prices. I mean, there was Calvin Klein hoodies that were going for like $30. And I was like, that is pretty cheap, because I've just been in the thrift store, bear in mind, and I was looking at fleeces that were around like 15 to 25 bucks, and they're obviously used, not in great condition. Some of these are brand new items. So clothing is definitely on sale right now. So it's a great time to buy if you have the money. If you don't, then obviously it's not going to make any difference. And it's because people aren't spending money on these discretionary items. I mean, that is obvious when you look at what is going up in price and what is going down in price in the CPI. And obviously, like I said, the oil price is going down and gas price is going down. That's also indicative of an even bigger recession, a global one, which we know is going on. So obviously, when you've got things that you need going up in price and things that you don't need going down in price, that is so indicative, like a depression type situation that you've got going on there. Not very good at all. And then if you get into the provincial breakdown here, British Columbia, Alberta, and Ontario have the highest inflation rate in the country, although in all those three provinces it has declined, and in Alberta the most. And obviously I've done a few videos about the Alberta boom bust cycle, and it looks like Alberta is going from that boom into bust right now. So we'll continue to monitor what's going on. But obviously you've just got to remember, guys, that the unemployment rate is going up every single month pretty much. I mean, we might see a month where it comes down slightly, and this is incredibly manipulated data, as we know and have been through on this channel. If it's something you're interested in, we go through it on a monthly basis. But still, they can't hide the trend of how many people are losing their jobs. So it is crazy, and this is turning into a gnarly recession, which is just literally where the GDP growth is just pinned up by population growth, whereas everything else is going wrong in the economy essentially. And then you've got the yield curve, which is about to uninvert. The US yield curve has already uninverted, which typically means recession within 6 months. So obviously, again, not good. And that's just technical recession. But obviously, if the United States, Canada's biggest trading partner, is going into recession, then that ain't good for Canada, is it? So let's take a look at what's going on with rents now. So year over year, 2-bedroom. I'm not even going to go through the 1-bed. I'll just stick with the 2-beds on this. Otherwise, we'll be here all day. So Vancouver is down 6.4%. Toronto is down 7.5%. These are rents year over year down these large amounts. And we're not even talking about including inflation. So the declines are a lot more if you add in inflation as well. So the case for investing in apartments and townhouses and houses in these big Canadian cities is falling apart. And it was all speculation anyways, as we know. So you can see here Brampton down substantially, 8.9%. Kelowna, BC, this was a boom town during the pandemic, off 11.3% year over year for rents. And what we're seeing generally happen is the larger the home goes, the bigger the decline in the rent, because people can't afford it essentially. Rents are tied to incomes, and obviously they can fluctuate. We've seen that happen in the US back in 2008. They can go above the growth rate of incomes, but then they correct right down to it. It can't sustain itself for long for obvious reasons. And then if you look down here, you've got Halifax, 12.5%. So Halifax is up 12.5% year over year. It's actually overtook now Ottawa, Oshawa, Kitchener, Calgary, Nanaimo, Niagara Falls, and London, Ontario in terms of rent prices. So Halifax, Nova Scotia has gone from like what people would have said as one of the cheapest places to live to one of the most expensive cities to live in Canada. And when you look at the average wages there, yeah, it is appalling when you look at these rents as well. So Ottawa is up 2%. You've got Kitchener down 2.7%. You've got Calgary that's off 2.6%, although current data suggests it's off over 5%. So this has continued to accelerate. You've got Nanaimo up 14%, Kingston 14% up. You've got Gatineau in Quebec up 21.6%, just insane. You've got Windsor, Ontario down down 6.7%. Another boom town where people were speculating like crazy during the pandemic. One of the first places that I called out on this channel, actually. Quebec City up 8.3%, Edmonton up 8%, Winnipeg 7.9%, Regina 16.1%, and then Saskatoon up 18.4%. So this is definitely a mixed bag when it comes to rents that are going up and rents that are going down. So it's hugely different depending on which city you're in. And obviously this rent report will be linked below. So anyway, we'll continue to monitor what happens as the economy implodes here. And if you've enjoyed this video, I would highly recommend that you check out this video here. And if you're looking for a VPN to protect your privacy, you know where to go. Go to expressvpn.com/marketmania. Link in the description below. Helps out the channel. VPN that I use myself. I will see you